Hi there, I'm Rachel Francois, Associated Broker with Pure Realty and Team Leader of the RXR Home Team. And I'm with my preferred lender. This is Lynn Morenz with Barton Creek Lending. And we're just here to give you some information about what happens if you miss your mortgage payments or you think you're going to. So first question would be, if you think you're going to miss your mortgage payment, what should you do? So let's let Lynn answer that.
So I obviously work in the lending industry, and it's all over the board depending on what type of loan you have. But the basics for any loan is if you are going to miss a mortgage payment, do not miss the mortgage payment, call your bank and file for forbearance. The forbearance is going to go on until December, but if you just miss a mortgage payment without contacting anyone, that's not a good thing. It'll show up as a late on your credit report, which you do not want to have. So be prepared to sit on the phone for a couple hours. There's so many people calling the different servicers and the different banks that get a magazine, get a project to work on, but you will be waiting on the phone for quite a while.
And if you've already missed your mortgage payment?
Still get on the phone and say, I'm sorry, I thought, I misunderstood forbearance, and they might actually backdate it to forbearance.
Okay.
But you have to be proactive. The bank is not going to do it for you. So.
And what's the difference between forbearance and a deferment?
Well, some banks use that interchangeably. So for mortgages, they're really one and the same. Okay, but for student loans, a deferment is basically you're not making your payments and the interest part is deferred. On a mortgage, forbearance and deferment are the same thing right now.
Okay.
So there's no differentiation except when it comes to how it's handled on the type of loan you have.
Okay, and so if you get a forbearance, how does it affect your credit? How is the interest paid, or is it paid at all?
So the forbearance is, keep in mind that's just the mortgage. You also have taxes and insurance and HOA dues, which
Right.
are paid separately. That doesn't cover that portion. So when
Just
you
the
go into
principal.
forbearance, be prepared that you're going to have to get your taxes caught up. You're going to have to get your homeowners caught up because most people escrow. So 1/12 of your mortgage of your homeowners insurance goes into your payment. 1/12 of your taxes. Remember, the banks are only talking about the principal and interest
Okay.
portion. So when you go into forbearance, it depends on what type of loan you have. So let me start with FHA. So FHA allows 6 months right off the bat. You don't need to send them documentation or paperwork. You just have to attest that you will need assistance. During that time period, no payments are made. If you happen to make a payment or two, it's actually held until the forbearance is up. When you get employment, you want to stop or contact the bank and say, okay, I'm employed now, what can we work out? So the longer you're on forbearance, obviously the harder it is to get caught up. And the banks also want to know if you're employed again while you're still on forbearance. So once you get a job, you want to contact them and say, okay, what kind of program can I go into? FHA will never make you pay everything up front. Neither will USDA or VA. Those are the three main types of government loans. They will work out a plan. And to be honest with you, VA is still working on theirs. And I think so is USDA. I read a little bit about it. FHA, they'll probably all follow the FHA model. But FHA says that you can first apply for 6 months, then you can apply for an additional 6 months. At the end of the 12-month period, then you have to contact them, your servicer, because now the 12 months is up. And you either have to work out a payment plan that you can actually make the payments on, or at that point in time you're still unemployed and you have a lot of equity in your house, you might want to consider selling your house. And the reason for that is the lenders are allowed to foreclose on you. Foreclosures have been banned all the way through the end of December. But that's just the end of December. If you're still on forbearance after that, remember the deadline is 12 months on FHA. And to get that additional 6 months, they're saying you just attest that you still need it. But I suspect down the road they might be asking for a little more paperwork. None of the banks want to foreclose on you. They want to work something out. But if you're still not employed and you have a ton of equity in your house, do you want that equity to live on down the road, or do you want the banks to have that equity? Because they are allowed to foreclose on your house
Right.
if you can't work it out. So
And then you said it's different for conventional loans.
it
right?
is. Conventional loans across the board is really servicer based.
Okay. So
You
just have
could
to call
get
your lender
you
and
could
find
get
out.
3 months up front right away with the attestation, but after that you might be able to get an additional 3 months. I have not heard of any lenders granting 12 months like FHA and VA,
Okay.
but every bank is allowed to set their own rules after that.
Okay.
So if you're behind on payments, or if you've been in forbearance and can't work out a settlement as far as what can we do, I've not heard of any conventional mortgage companies that have put in a junior lien like they might on FHA. What does that mean? On FHA, if you're behind 12 months, they will, and you've gotten a job and you can now start making payments, they add a second lien to your property, which equals the principal and interest of what you didn't pay during those 12 months. Keep in mind that insurance and taxes still have to be paid.
Okay.
So when you contact the servicer, be prepared to bring those up to date, because the servicers can't afford to waive the principal, interest, and your taxes and your insurance. Well, in some cases, that's a huge part of your payment.
Right.
So make sure you understand their rules and the guidelines. But conventional, you really do have to work directly with the servicer.
Okay. Great. And then if your servicer won't allow you to defer or get a forbearance, then your options are pretty limited. You need to decide whether you're going to get a couple of part-time jobs, or if you're going to sell your house, get the equity before it starts taking a ding on your credit for missing payments.
And that is correct.
Okay.
During forbearance, it has no derogatory as far as your scores for forbearance. We have seen a few now that have been in forbearance, and in order for them to refinance or purchase, they have to have caught up all the payments. This is on a conventional loan. And then they prove they're caught up, they're out of forbearance, and then they have to wait 3 months to
Oh,
do
wow.
something.
Okay.
So there is a waiting period. I have not seen any rules or guidelines for FHA. I'm
Okay.
assuming there's going to be a waiting period as well. I'm also assuming that if you were in forbearance and then you didn't find employment, you're probably going to have to prove that the next 12 months you're able to make rent payments and stuff like that.
Okay.
You know, it's all about being able to afford to make those payments.
Right.
So,
Okay, great. Well, thank you, Lynn. And if you have any questions, I'll put our contact information on there. Feel free to contact us, and please let us know if you need anything. Thanks so much.